Welcome to the Business with Beers podcast. This is the place where we help entrepreneurs expand their business, build their wealth, and generate passive income. I'm your host, Brian Beers, an entrepreneur who's on a mission to inspire growth from everyone around me. Remember that you need to take the actions others won't, and you can live the life that others don't. Please be sure to check out my weekly newsletter that now drops every Thursday. It includes one quote, one tweet, one podcast recommendation, plus some business and investing insight from me. It's short and it's sweet. My goal is to provide you with just a couple gold nuggets to help inspire your growth. Go to brianbeers.com to subscribe. Well, welcome everyone. I'm very excited today to bring you Tyler Chesser. Tyler's a co-founder of CF Capital, which is a multifamily real estate investment firm that focuses on acquiring and operating stable cash flowing assets around the country. Tyler is also the host of the Elevate podcast, which I was fortunate enough to be on a guest recently. I'm excited and looking forward to our conversation today. Welcome to the show, Tyler.
Brian, great to be back with you, my friend. Thanks for having me.
Awesome. Leah, long time no see. It's been what, a week?
I know, right? I'm like, man, and are you tired of me yet or what?
Yep. Awesome. So for people that don't know you, do you mind kind of giving us an idea of your journey, maybe from, 18 years old to kind of where you got today, and then we'll break it down from there.
Absolutely. Yeah. So thinking about 18 years old, obviously I was kind of off to college. I went to Public University and studied business marketing. I was always actually fascinated with kind of the psychology of business and why consumers make certain decisions. Consumer behavior was always fascinating with, I was actually in sales kind of during my college career, kind of worked on the side in sales, and I was always fascinated why people applied certain higher value towards certain brands than others. And so anyway, I went to school for marketing. After I graduated college, I actually started working for a Fortune 500 company doing international marketing, digital marketing, market research, and so forth. And so I loved sort of that introduction to my professional world. It was very intellectually stimulating, but I will say the corporate life was not one that I really loved. And I was kind of put in a position where it felt like, man, there's a lot of politics involved here. If I want to get that next promotion, it's more so about the time in the saddle and, who really likes me above me, and who's going to pull those strings so that I can get that next promotion, so that I can get that next raise. And during that time, I bought a house. And, it was kind of like the, quote unquote, the American dream. And by the way, I grew up in sort of a middle class background. I mean, my whole thought was, hey, go to school, get good grades, get a good job, and, put your money away in a 401k, and, you're right off into the sunset when you're 65 and a half years old. And that whole process sort of, it kind of came to a head when I was in the beginning of my career as a corporate employee, because, there was things that were happening at my house that, I would have maintenance issues, or would have, various surprises. And, I was making decent money for sort of an early young professional, but it was kind of putting my finances in a bind. And so I started to question and say, all right, well, if that's the case, I need to get a raise. So the first question was, all right, how do I get a raise? And I need to go and talk to my boss and kind of make the case for why, I'm more and more valuable, and, spending a lot of time and effort and, sort of getting more valuable for the organization and so forth, but I was seeing those cost of living raises on an annual basis, which, at the end of the day, I mean, that's kind of funny to look back on and say a cost of living raise back in the day was 2%, which we all know, we've seen CPI over the past, month and a half has been 8.5%, and obviously historic. And the question is, hey, is cost of living really even 8.5? I think it's much more than that. What we've seen in terms of price increases and just cost of living in general in the United States. But, those things were offered to me. And so I said, all right, well, what else is available to me? It's all right, well, let's get the resume ready and let's look at some other organizations. What I didn't realize through that whole experience is that I was climbing the wrong tree, so to speak. I was trying to find a different corporation to help me sort of be promoted or earn sort of a higher salary, in a W-2 position. And so I never really thought that I would actually get into real estate or be an entrepreneur, but I ultimately decided to do that because I had some people who were kind of giving me other suggestions. And, I was asking questions like, well, what else is out there for me? And I was kind of in sales before I was in marketing. And ultimately I went and got my real estate license and started selling real estate. I started with residential. That happened that ended fairly quickly because it was not really something of interest for me. It did help me double my income, and it helped me quit my corporate job But then I dove right into commercial real estate brokerage, started selling mainly multifamily apartments. I actually sold an entire portfolio for kind of a mid-sized investment group in our region. And I started to sell office, retail, industrial, land, and really cut my teeth in just being sort of somebody who's kind of working hard and just trying to find deals and build a business and learn how to negotiate, learn how investors are looking at deals. And ultimately, that's how I got into the world of real estate. And it was so interesting because I was selling properties for a few years, and then I came across this little purple book that we've all come across, and, Rich Dad, Poor Dad. And it comes and it's like, well, wait a minute. What he's talking about is the real rich, they look at assets, right? And they build assets. And I'm thinking, it's like, wait a minute, I'm selling these assets left and right. I'm in the middle of this. I'm the one who controls the assets. And so I started to obviously learn about, well, what's the difference in obviously selling these assets or investing in them, and what does that look like? So I started active investing. I started buying small multifamily properties, operating those myself, managing those myself. And of course, there was many failures, many challenges along that path in building my wealth and so forth. But I started to learn the power of cash flow, not just earned income, but passive income. Mm-hmm. And so what I learned through that path as well is that the name of the game in multifamily real estate is scale. It was great to learn on smaller deals, make mistakes on smaller deals because they wouldn't put me out of the game. But they gave me the ability to say, all right, well, now I can go bigger. And so, I buy smaller multifamily, then I was buying mid-size, then I was investing from an LP perspective in other larger deals. And I saw that each and every larger deal that I invested in did a little bit better. And there was obviously a correlation there, was a pattern there. So that's kind of my journey in terms of where I came from 18 years old up to now. And today what we're doing is we're syndicating large multifamily assets, value add, some distressed assets, some stabilized assets, but we're always looking to add value, and we invite others to invest alongside our team. So that's what we're up to today.
Okay. And so how long ago was this? Like when did you start in commercial brokerage?
I got my license in 2013, and 2014 was when I really started selling commercial properties. So it was obviously we were coming out of the great financial crisis. I think there was still quite a trajectory there. So obviously, a lot of great deals. I mean, if you look back at that point in time, it's like, man, if you could have bought everything, you probably would have done well. But that's when I got started. Okay.
And then when would you start your first, the multifamily, you started buying these duplexes or whatever they were?
Yeah, the first deal I ever bought was an 8-plex, and it was in 2016. Okay, so I had a couple years, 2.5 years or so of commercial real estate experience under my belt. I actually went and got my CCIM designation because I was like, a lot of this stuff is, hey, I'm learning from mentors, I'm learning from my clients, but I need to understand the ins and outs. I need to understand what makes a good deal, what makes a bad deal, what are the drivers behind these investments, and understand that ultimately we're assuming risk for a reward. And so that was a part of my kind of learning process as well.
So was it more from the official education, or was it learning kind of from mentors, trying to like really truly understand the deals they're buying? Like, what's the underwriting look like? Like, how did you go about, or advice for somebody how to kind of go about learning this?
Yeah, I mean, the CCIM sort of education was helpful in terms of evaluation of deals, not only from an underwriting perspective, but just from, looking at deals to be able to evaluate the risk. Because I went from like, hey, back of the napkin. A lot of my clients were back of the napkin, and, it was like, okay, well, they're making decisions, they're doing well. So I was kind of learning from both sides of the fence, like the highly sophisticated evaluation underwriting models from CCIM, which is really kind of the PhD of commercial real estate.
Yeah.
It's a very highly...
What's it stand for?
Certified Commercial Investment Member. And okay. It's a global institute. It's a very refined process where you learn about, investment analysis, market analysis, user decision analysis to understand more about your tenants or your residents and so forth. And so understanding sort of a comprehensive look. So it was between sort of partnering with clients or evaluating deals with clients and kind of getting reps, but also layering over sort of this education, which then allowed me to get into the game. And the real education came from action. It came from falling on my face. It came from making mistakes. It came from building the team wrong, and, having to replace team members and so forth.
Yep. So 2016, you buy your first 8-plex or whatever. And then what year did you do your first general partnership, like a syndication?
Yeah, I mean, I started LPing in 2018, and so we didn't actually start syndicating deals until 2020. So it was a little bit of a time. And what I always felt was, hey, I'm going to learn. And I actually never knew that you could syndicate larger deals. I didn't know anything about that at that time. My whole thought was, hey, you go earn money and then you put money into a deal, and that's just kind of how it works. And obviously that's a a long, windy road to get where you want to go in terms of your goals. But you can do bigger and better things when you pool capital. But I do think, looking back, and I don't think I knew this at the time, it was important for me to learn with my own money and then get to a position where then I could, sort of take a larger responsibility and invite others to invest alongside us. We still invest in every single one of our deals, but we started doing that in 2020.
Okay. Yeah, it's kind of interesting, like the timeline, like in 2014, you got into commercial. 2 years later, you bought your first thing. 2 years later, now you're as an LP, and then 2 years later, GP. And kind of this progression of continuing to learn and kind of evolve and take what you were learning and actually put it to use. Like you said, you're taking those actions. So
again, awesome. Looking back, like the dots connect perfectly, but going through that whole process, it wasn't, it definitely didn't connect exactly the way that I expected it to. But I've just always looked at real estate and just kind of this business as, continual progression, and also, hey, what's the next level? And does it make sense for me to play at that next level? And so the more that I learn, the more that, more action I can take, and the better I can do. It's like, the more, if you know better, you can do better.
Yep. Awesome. So what's the business look like today? How many units do you have under management, dollar value, however you guys measure it?
Yeah, so we're at about 1,000 units. I'd call it, depending on your valuation, I feel like we typically buy deals that we step into immediate value. Mm-hmm. And so we're looking at, you call it 80 million under management currently. And of course, from an equity perspective, we're involved in over 4,000 units as well, in addition to what we're actively managing with CF Capital. In addition to that, we are beginning the development arm of our business. We've been approved for tax credits for a new development in Lexington, Kentucky. And so we'll be putting up about 200 units there here over the next 12 to 18 months. So we're in the middle of a rezone there. So we're excited to expand sort of another leg of the stool for our company, and continue to grow there.
Okay. And what's your team look like today?
So our team is pretty small. It's pretty lean. It's myself, my business partner. We have a COO. We also have an analyst on staff, as well as a marketing individual. And everyone else is either strategic partners or vendors. Of course, from a legal perspective, we have a securities attorney. We have a real estate attorney. Unfortunately, we have too many attorneys. We have an accounting team that's very, very important to us. We have a property management third-party group that we work with. Trying to think. We've got so many team members. We have other vendors that we work with. Actually, we've found that a lot of freelancers through a company called Bullpen have been very helpful for us. It's kind of like the Upwork for commercial real estate companies. And we've developed a great relationship with them and various different providers. But for the most part, that's our core team. And we're continuing to grow that. Of course, as I mentioned, strategic partners are important. Typically, we'll have, at least one co-sponsor with us on unusual deals, just depending on sort of the lift and the load and so forth, so that we can go further faster. But in general, that's kind of the basis of the team.
Okay. So I know you guys work with Holly Williams a lot. She's, also a friend of mine. I've had her on the podcast. And so I guess talk me through, what does that look like, that kind of relationship of using a co-sponsor? Why do you do it? How do you choose who you're going to work with? Do you always kind of work with the same people, or does it change based on the geographics or the need of the deal?
It changes based on the need of the deal. But I will say that, Holly, as an example, is somebody that we've worked with on several deals, and we're working with on a deal currently. Holly brings a great sort of strategic approach in terms of not only helping us guarantee the debt on our deals, but also supporting us in raising capital, supporting us in investor relations, asset management. In these deals, there's always the unexpected, right? Expect the unexpected. And so it pays to have folks that have been in in the game or in the business for much longer than you have and have a longer track record than you have, to be able to sort of make decisions and understand blind spots better than we could. And, as you mentioned, I've been in the business, for the past 8-9 years, but obviously, in the grand scheme of things, that's really only a snap of fingers. And especially in terms of where things have been, over the past 14 years, we've seen a run up. At some point we're going to have another correction. So it's always helpful to have more wisdom sort of on your side of the bench than needed. And so, there's many different ways. We look at deals in 3 different categories. We look at it from an equity perspective. We look at it from a deal sourcing, acquisition, asset management / exit perspective. Mm-hmm. And then we also look at it as a debt guarantee. Those are the 3 different categories that we look at from the GP standpoint. And so depending on what the deal needs, we may have to structure our partnership, in various different ways. If we need someone to come in as a key principal to support us in terms of signing on the note, to bring certain net worth and liquidity to the table, then we'll do that. There's some deals that we can do that ourselves and we don't need to do that, but it just depends on the size of the deal. And anyway, so those are kind of the 3 categories, and we kind of make shifts based on what's needed for the deal.
Okay. Awesome. So then someone who's like, I don't know, looking to get into the game on the GP side, maybe for them, that's the right approach, right? They can help find the deal, and then they kind of partner with somebody maybe like you guys or like Holly or somebody else who can help bring some of the things that they don't have, right? Whether it's the debt guarantee net worth or the management experience, or they can like see the bigger picture.
That's right. Yeah, yep. Exactly. So, one of the things that's important today is that you can't really get compensated as a capital raiser, quote unquote. And that's not legal. And so unless you are a registered investment advisor or a broker dealer, but typically what happens is if that's the main participation that you have, you're also involved in asset management. You're also involved in investor relations and communication and strategic decision making. So, you think about it, it's like, well, what's your lead role? And then what are your minor roles? What are your minor focuses? And so those are some of the things that we think about. So if anybody is interested in doing sort of co-GP type of work, those are some basis thought processes in terms of, all right, well, what value am I bringing to the deal? Is it sourcing the deal? Is it guaranteeing the debt? Is it raising capital? All right, well, what else do I bring to the deal? And start to kind of have those discussions around those foundational points.
Awesome. So shifting to kind of you personally, in terms of you growing your wealth, right? You're making money through being a GP, through, investing in deals. And then where do you go and redeploy your capital? Obviously you put it into your own deals. Do you diversify further outside of real estate or outside of multifamily or crypto? Like, I don't know, what's your kind of internal strategy?
Yeah, I mean, I've got a close eye on crypto. I mean, I did just invest in a Bitcoin mining fund. So I'm excited about that. I think there is a different sort of profile of that investment, of course, than multifamily. There are a lot of similarities, but I certainly, I would say the majority of my capital is involved or tied up in real estate deals. I'm always looking for, ways to add value. And I think that, sort of my insider experience in this space allows me to create the most value in the real estate space. But like I've recently experienced a foray into the infinite banking space. So, I've got a policy there where I've got cash value to deploy, and, will that go in another real estate deal? Possibly. Will it go into another sort of debt instrument? Possibly. So I'm looking at those options. I do invest passively in other people's real estate deals. But beyond that, I do have some other sort of traditional investments. I do own, some stocks. I do have some IRA investments and so forth. So, always looking to ensure that there is a bit of a balance there in terms of some diversification. But the majority of my capital, at least where I'm at right now, because I'm in growth mode, I'm looking to continue to grow, over the next few decades, to be honest with you. So where my expertise lies is in real estate, but there are some exposures otherwise. I will say also, over the past couple of years, I've invested in gold and silver. It's not the most exciting investment, but I almost see it as more of a security, because I am concerned about where currency is today, where the dollar is today, where currencies are across the world. Obviously, inflation is a big thing. So I take a look at, all right, well, what's my balance of cash to recognize that, to be able to capture opportunities, you got to have some cash. The balance there, and also recognition that, hey, that cash is dwindling quickly based on sort of the valuation and so forth. So, I look at investments like that, but there's many other things. But of course, just investing in our business. Our business is the best way for us to continue to grow income, to have the opportunity to capture new investments. But those are just a few things that I've been looking at. Awesome.
For gold and silver, do you buy physical or like ETFs?
Yep. Physical. People that are smarter than me in the space say that that's where you need to be. Yep. I mean, if you're going to use it as a real insurance, for your kind of overall wealth position, it kind of defeats the purpose if you're going for ETFs or paper in that space, is from what I understand.
Okay. Well, do you have like a certain percentage you try to get there of your net worth? Like, I don't know, 1%,
I don't. I mean, I just started doing that. Actually, I started doing it in 2020 because I saw how much money was being printed, and I saw the writing on the wall. I mean, we're going to see significant inflation. I mean, I don't know if you see this, but if you have 40% of the money supply that's newly injected, what's going to happen eventually is that 40% of the value of the currency outstanding is going to be devalued in that capacity. So I saw that immediately, and I just went out and bought a tranche of gold and silver, and I have a fire safe, and it's kind of sitting in it. And it's like, it's definitely not exciting, but it is a preservation of wealth. Protects purchasing power. That's one of the biggest things that I've recognized is that, let's think about our purchasing power, because it's not about the accumulation, and of course you like to see a growth in net worth and passive cash flow and just cash flow in general. And what is that in comparison to your overall burn rate and so forth? But I think preservation of wealth is something that I've had a big focus on over the past couple of years.
Awesome. And shifting to so you have a podcast, Elevate, where you talk kind of about mindset, right? And like, hey, you got to be in the right mind to generate wealth, to build passive income. Can you speak to maybe what are some of the biggest lessons you've learned from doing that kind of podcast, and maybe your own kind of evolution from your guests and things you've learned?
Absolutely. Well, one of the things, the foundational thought process is what I see is up to me. And I actually just recently heard that phrase, and it was like, that actually puts it all into context, because as a business owner, as an investor, as just a human being, like we all have circumstances in our life that happen that we can either attach, hey, this is good, this is bad, this is horrible, this is really exciting. And so what I see is up to me allows me to recognize, and it allows anybody to recognize, that we have the choice in terms of how we react to certain circumstances. And to me, that's everything. If we run into a challenging situation in a deal or with a member of our team, we get to choose how we react. We get to choose what gifts we're receiving based on that circumstance. We can either be the victim and receive more bad things, or we can be the victor and receive the gifts of the circumstance on the way to victory. And, from what I've learned from the podcast, I mean, I've been grateful to be surrounded by so many people like yourself, so many other people that have just really set a huge life of inspiration. We've had people like Seth Godin, we've had people like John Azaraf. We've also had, some of the greats like Peter Linneman, Ivy Zellman, some of the, economic greats over the past, decades, and people that are so smart in terms of their line of expertise. We've also had some phenomenal investors. And what I've learned is the people that really get on in this world are ones that they have a growth mindset, and they recognize that there's always something to learn. There's always another level that they can grow to. And, they've obviously set themselves up for success currently and in their past, but they're always looking forward. And for me, I think that's some of the things that I've really learned, and just being immersed in that world, and continuously kind of learning through osmosis and recognizing that, hey, it's not about knowing everything, but it's about asking questions. It's about being humble. It's about elevating others around me. It's not just about, hey, what can I receive, but what can I give? And, there's so many patterns that I've recognized through those conversations, and it's been a great blessing. It's funny. I mean, this better than anyone, doing a podcast is a lot of work, and I've been doing it for almost 3 years now. And I was talking to my wife about it last night. It's like, hey, I should continue this, right? And she's like, well, what do you get from it? And a lot of the stuff that we just talked about is what I get from it. Even if we didn't receive, new investors coming into our business, even if we didn't receive new strategic partners or, deal opportunities, it would still be worth it, just because being immersed in that type of growth is important. And for me, like as an investor, I think growth is more important. And also that's what allows us to live a life of fulfillment. It's not just about dollars and cents. While, living a life of freedom is important, and I think financial freedom is kind of the basis of that. It is about living a life of fulfillment rather than just a life of success, because, one of the things that Tony Robbins says is that success without fulfillment is the ultimate failure. And so that's kind of something else that I'm seeking through that, and growth as an individual, and giving that to other people allows me to live a life of fulfillment.
Awesome. So what I see is up to me. Can you give I don't know, have you have any reflection on maybe something that, previously you saw as like you were the victim, and then now you've kind of can look at that same event now through this new lens, right? And you see a different perspective, and now what you see is, what can I learn and be the victor? Anything from your life that through this you can provide an example of?
Every day I have an example of this, every single day.
What about yesterday?
And I have to, yeah, well, I mean, so actually yesterday, so we're in the middle of this deal right now, and through due diligence, we've uncovered some significant issues with the property and, with the existing operation. And so unfortunately, we don't like to do this, but we've had to renegotiate, and, we're asking for a significant credit from the seller. And so, the initial reaction myself is, my God, we've spent so much time on this thing. And if they don't, give us what we need, what a waste of time and effort and energy, and how much more time, effort, and energy could we have applied to things that were going to be productive? And, ultimately we've received some optimistic news, and we're working towards a resolution here. But initially it's like, man, I'm the victim. What the hell, man? You just wasted my time. And why did you misrepresent this, that, and the other? And because of you, now I'm losing all of these things. Right. And so the question is, wait, all right, snap out of it. So, all right, so let's just explore this thought process. If what I see is up to me, what could that mean in this circumstance? It's like, all right, well, now let me put myself in the frame of possibilities and say, okay, well, if what I see is up to me, what is up to me? What is good about the circumstance? We learned something. There are a few things that we've learned. We've learned that, our due diligence process works. We've learned that, there maybe are some parts of our timing that could have been better. We could have uncovered these things a little bit earlier. We could have asked, our construction management partner a little bit more detailed questions, and garnered more detail ahead of time before executing the purchase and sale agreement that, we could have done better. And so it's not, hey, we could have done better, so we failed and we were the victim of our own poor decisions. It's now we receive that gift, so now next time we do better. And so through these experiences, each and every time we get better. And Robert Kiyosaki talks about this all the time. It's like financial intelligence. You learn financial intelligence through doing. And it's about these type of experiences that give you another kind of notch on your belt. So what I see is up to me in this circumstance is like, oh man, I feel like I wasted so much time. And if you would have just told me these things, we could have, figured this out, 3 weeks ago, and I wouldn't have had to, work weekends and nights when I've got twin infants screaming in my ear. I could have had a much more pleasant past 3 weeks. So, there's so many other examples, but that's just one way to look at it. And I can apply this almost in every way.
Can you speak to what that was? The due diligence issue?
Yeah. It was, there was quite a handful of residents that were leased to that should have not been leased to. They did not pass credit checks. They were kind of on the edge. They were conditionally approved credit checks, which means they probably shouldn't have been if you're really...
They were just taking any guy off the street, throw him in this apartment, say that get the pro forma up, and then sell it to you guys and make your problem when they don't pay the next month.
Exactly. When I got started as an investor, I bought a property that had what I would call a loaded rent roll, which means, oh, on the rent roll, it looks great. And it's like, wow, fully occupied. This is awesome. We can go in and just renovate units as they come available. But what happens is, well, wait a minute. What happens when 50% of your tenants don't pay? And it's like, oh, they didn't tell me about that in Rich Dad, Poor Dad, And so when that happens, it's put up or shut up time. It's, how strongly are you going to hold to your policy of, hey, rent's due on the 5th. And if it's not in, you're getting a letter and you're late and you're going to get evicted thereafter, because once you evict 50%, you're at 50% occupancy, and then you got to renovate units. You got to do all that kind of stuff. So I've been there before personally on smaller deals. And what I've seen is that we have a significant portion of this property that what I would call as non-performing or expected to be non-performing. So we're projecting now a dip in occupancy before we can improve that situation. So we've asked for significant credit from the seller to rectify that and to help us shore up that cash flow in the short term.
Like those units were vacant, basically, is
exactly
the adjustment.
It's almost worse. It's worse than vacant because you got to spend time, effort, and energy to get rid of them. And then release it, not only release it, but, you're going to have some time period, like a vacancy period. Plus you got to get the unit rent ready. Typically a non-performing tenant does not leave a unit, in clean rent ready condition.
Yep. Yeah. So one of the things I like the most about what you said is like, what's the good in this? Like your process works. Like that's like an awesome thing to think about. And then, what could be done a little better? Maybe, we could have, I don't know, started the lease process maybe a little bit sooner before we got to this point. Right. But like you said, it's finding the good and then just figuring out, all right, what do we got to fine tune now? And at the end of the day, there's always going to be something. You can't process out every issue. People are deceptive and people, lie, which is why you do diligence and got to do what you got to do. So,
but you can refine it, right? You can improve it. You can streamline it. We could have done it quicker. We could have got ahead of this a little bit quicker. And so those are all gifts. I mean, there's so many others, but just in that particular circumstance, in terms of what we found through the lease audit, there were some things that we could have probably read the tea leaves to be able to anticipate that a bit more, but ultimately it's all good, but there's a big gift in it, but originally, again, like my thought process is, and this is someone who I condition my mind for success constantly, not only in these conversations, but through books and through other podcasts and being in masterminds and things like that and hiring coaches. But, ultimately my first reaction was, this is such a big, massive failure. And I'm a big victim of this whole thing, so it comes to me as well. Awesome.
Any books you're reading now that you would recommend?
I'm currently reading The 48 Laws of Power by Robert Greene. And it's actually one of the most unique books I've ever read. It's very cutthroat. I'll say this, I'm kind of I have an abundance mindset. If I give more, typically I find that I receive more. I will say that, I think it's important for us to recognize the laws of power. And it has been very illuminating to understand, how certain individuals who are somewhat cutthroat and in the real estate business, it can be very cutthroat, to recognize, hey, what laws of power are people trying to use against you to gain more control over you or to sort of put themselves in position of power. But that's a great book. Man, I'm a big reader in terms of what else am I reading right now? That's the only one. Typically do have a couple books going at one time, but I will say I do have 2 infant twins right now that are keeping a little bit more of my focus.
There you go. How old are they?
They are 13 weeks.
Oh, wow. Okay. Yeah. So, well, congratulations. First kids.
Thanks, man. Yes. Yep. 0 to 2. I like to scale the family immediately.
There you go. Good. Awesome. I'll have to check out that book. Yeah. It sounds interesting. I just pulled it up on Amazon here. So cool.
Yeah. He talks about like Machiavelli, like from 3,000 years ago, 2,000 years ago, and like some of the things that they did and ancient Rome. And it's just like,
this is the timeless perfect gift for the power hungry. Who doesn't want power at an excellent price?
Is that what it says?
That's like the review. The first review said the writer comes off as a psychopath. It's just power hungry. Anyway,
it's awesome. Kind of intense. I'll say that, but it's a really interesting book. It's different. Again, it's different than anything I've ever read. A lot of these
cutthroat
personal development and self-improvement books are very, rah, and hey, we all win. But, the world is not a super nice place in all regards. So we have to understand what are some things that are being used against us, and when needed for the greater good, what power can we obtain and what are some strategies to do so? So it's an interesting book.
Yeah, that's awesome. Yeah. Thanks for recommending it. And where can listeners connect, find more about you? If they're interested in any of the deals you got going on, what's the best place to reach you?
Yeah. So for CF Capital, if folks are interested in investing in our deals or just learning more about our process, they can just go to cfcapllc.com. We've got a super easy way for folks to sign up for our database, our email list. And they also will receive an ebook. It's called The Bottom Line, 10 Ways to Increase Cash Flow in an Apartment Complex as a result of being a part of our database. But again, our philosophy is long-term relationships. So we're not interested in rushing anybody to do anything they don't want to do. If they want to get educated, if they want to learn more about what this whole process looks like, we have a ton of educational material there. So again, that's cfcapllc.com. And of course, as we mentioned regarding the podcast, if your listeners are listening to podcasts, it's very easy for them to go check out Elevate Podcast with Tyler Chesser. It's a real estate investing podcast for mindset, mind expansion, personal development. And that's elevatepod.com. Or of course, anywhere where the listeners find podcasts.
Awesome. Well, thanks for coming on and sharing all your wisdom. I deliver a ton of value and I appreciate it.
You bet, man. Thanks for having me, Brian. I'll talk to you soon.
All right. See ya. That's all we got for this episode with the Business with Beers podcast. One thing that would really help both us and other new potential listeners is to rate the show and leave a comment in iTunes, Stitcher, wherever you listen. Also, make sure to link up with me on your preferred social media platforms, LinkedIn, Instagram, Twitter, Facebook. You can find all my links at brianbeers.com. Please just share the podcast with anyone who you think might enjoy it. And until next time, remember to take the actions others won't to live the life that others don't.